This video will answer the question, can I get a better policy for Infinite Banking? Brought to you by SCFSIC.
This question is, can I get a better policy for Infinite Banking and the tax-free cash growth warehouse strategy? If you have a life insurance policy, but you wonder if it's really usable for Infinite Banking, we're about to explain what you can do about that.
A man told me the other day that he's interested in infinite banking, and he has a whole life policy with a top mutual company, but his agent doesn't seem to know much about infinite banking. He learned from doing some research that he should have some kind of riders on his policy to make it more effective for infinite banking.
And that's true. The design of the policy makes all the difference in how quickly cash value becomes available to use with the Infinite Banking TFCGW strategy. Without the proper design, it takes 2 years to begin accumulating any cash value at all. No cash value, no banking, no self-financing. And it's also true that, I admit I'm guessing here, but in our experience, less than 10% of all insurance agents know anything about the infinite banking strategy.
And even fewer know how to properly design a TFCGW account. So the question comes up, can I add those riders to my current policy?
There are 2 riders that, when designed into a policy, contribute to the cash value growth significantly. In some cases, one of them may be added after a policy is in force. The other one cannot be added after the policy is issued. There's a third rider by which a one-time lump sum may be added to a policy and where the majority of the money goes to the cash value. So it depends on the policy provider and the design of the policy whether any of those riders can be added after the policy has been issued.
There is another option. It's called a 1035 exchange. The provision allows one policy to be exchanged for another policy. While it is a process, it's a common practice and quite easily done.
With a 1035 exchange, if there is cash value in a policy that is being exchanged, all the cash value transfers to the new policy, and with no taxation, no penalties, and no fees. And that's a good thing. And by doing an exchange like that, you're able to obtain a policy that is properly designed for infinite banking and the TFCGW strategy, which will empower you and give you control of the growth of your wealth.
You'll keep all the cash value of the old policy and usually be able to get more insurance for the same premium. How's that for financial empowerment?
Yeah. For example, when I first learned about infinite banking, Amanda and I had basic straight life, whole life policies with one of the big 4 mutual companies. That company did not have the design options that I wanted for maximizing the cash values for infinite banking. So I exchanged our policies for new policies with another one of the big 4 mutual companies that does make those high cash value riders readily available for designing the best policies for infinite banking.
With the infinite banking design, we were both able to increase our policy's face value by 50%, and our premiums remained the same as they were with the previous policies.
And this was even though we were now 4 years older than when we bought the former policies.
And age is one of the biggest factors in the premium cost.
More importantly, our policies now began to grow cash value at a much faster rate. We were able to start using our cash values to self-finance things and save all the financing fees and interest. And believe me, gaining that kind of control over our finances brings a great deal of satisfaction and relief.
It also gives us confidence that our financial future is safe and secure. This infinite banking TFCGW strategy really is powerful, feel-good strategy.
Yes. So let's recap. Yes, You can get a better policy than what you currently have by exchanging your policy for a properly designed whole life living account with a top mutual company.
It doesn't matter what company your current policy is with or the company your new policy will be with.
You can exchange a whole life or universal life policy for a properly designed whole life living policy. And if what you have now is a universal policy, the sooner you get out of that, the better.
And if you currently have a term policy that has no cash value and cannot be exchanged.
Agents and providers commonly refer to converting a term policy to a whole life, but that's really kind of misleading. The term policy contributes nothing to the process other than in the early years of a term policy, you can get a whole life policy with the same face value as the term policy you're giving up without having to do another medical exam. But that's it. None of the premiums that you've paid into the term policy will be returned to you or transferred to your new policy. And there is no cash value to transfer, so it's really not a conversion, it's a replacement.
So drop the term and stop throwing your money away and get an asset account, a TFCGW design, whole life living account.
To understand the differences between whole life, universal, and term insurance, watch our frequently asked questions answers video, whole life versus term, which is better? We also talk about universal insurance in that video. It's basically a term hybrid.
And to really understand infinite banking and the tax-free cash growth warehouse strategy, watch our free 60 minutes TFCGW webinar, How to Become Master of Your Financial World. The link is in the description box below.
Also, please subscribe to this channel and post your questions or leave a comment in the comments section below. We will respond to everyone. Mahalo for watching.
We hope this has helped you.
And come back often for answers to frequently asked questions and for practical examples of using the TFCGW strategy.
Aloha for now.